This is a download from BFM 89.9, the business station.
Good morning, Dodge. Thanks for joining us on the Memorial Day weekend. Jumping right into things, what did you think about Janet Yellen's comments last Friday suggesting that a decision to tighten monetary policy is, in fact, possible this summer?
Good morning, Melissa. Well, Janet certainly has changed her song and is singing very much the same song as the rest of the Fed choir at this point. You go back to March 29th, she was emphasizing the need for caution in raising interest rates, referring to recent financial turbulence. Now, if the economic data stay close to the Fed's forecast, a second quarter point rate hike should be expected. So that is a very big change. What has changed is that the financial markets have shifted more than the economic numbers in the past 2 months. So yes, I do expect it, but the timing is going to be rather interesting. You have to take a look and see whether or not it's actually going to happen in June. So it's still a big question as to when it will happen, but it's much more likely now in the next 2 to 3 months.
Well, all of this is contingent on the U.S. economy continuing to improve. But we saw GDP figures last Friday, which showed the U.S. grew at a slightly better rate than first thought in the first quarter of the year. So what's your bet? Are you expecting earlier rather than later?
Well, just from a pure economic point of view, new home sales surged the highest rate since January of 2008. The index tracking contract signings of previously owned homes hit the highest level in a decade. Durable goods jumped 3.4% in April. The Fed revised its second quarter GDP growth to 2.9 from 2.5%. All this is good. The most important data will be the employment numbers to be released on Friday, and there may be a decrease of up to 40,000 resulting from a strike that Verizon Communications had, which was just tentatively settled this past Friday. Also, you have Yellen's speech coming up on the 6th. I suspect that the economic numbers will support an increase in the interest rates, but I also suspect that the Fed may delay because of the potential British exit from the European community. They don't want to have that as a surprise hanging over on a negative basis. And you take a look at the Fed funds futures market right now after the Friday reaction to what Janet Yellen said. It only indicates a 34% probability of a rate increase in June, much higher, 58% in July. So I suspect that the economic numbers support it, but that what's going on geopolitically will probably require a delay till July.
So the stock market absorbed the news pretty well. How you put it, how Janet changed her tune. Stocks closed higher on Friday. Why do you think that the stock market kind of brushed off Janet Yellen's comments?
Well, the economy appears to be more able to deal with the interest rate increase. And what's happening now is because it's right around the corner, there is a greater market focus on the actual increase. We're talking about 25 basis points, and we're talking going to a half of 1%. There's much more focus on what is actually going to happen rather than the visual of this is the second rate increase that we've had in years. So I suspect that as we get closer and closer to the reality of it, the market will assimilate exactly how much of an increase there will be and will measure it against the strengthening economy, which, no, it's not running away, it's not terrifically strong, but it continues to increase, and it appears to be able to accept the actual rate increase that is being perceived to occur in the next 2 months.
So given all this, Dodge, what is your outlook for the dollar heading into the summer?
Continued volatility, more to the upside. We suspect it'll be a reaction once we know whether the interest rates are going to increase or not. If they increase, I suspect the dollar will continue to increase. One thing we will be watching, Melissa, as it affects the U.S. dollar, but we will be watching what happens to gold. As the U.S. dollar strengthens, gold weakens. We're not trading gold, but we're watching it because the U.S. dollar, the relative strength of the U.S. dollar will be contingent upon whatever currency you're measuring it against. And so gold is outside that parameter of the trade. And it'll be very interesting to see what exactly happens with some of the gold ETFs, and that will be a way of measuring how really strong the U.S. dollar is. But the U.S. dollar is looking up, and unless interest rates do not go up, it will probably have more to the upside rather than the downside.
So you said you're not trading gold at the moment. Is it too late to get into the game?
No, it's not. From a longer-term point of view, Melissa, gold is fine. It's going to continue to have an upside momentum. Right now, until we see what's going to happen with interest rates, gold is going through a pullback. It actually has had quite a move over the last 3 months, and yes, we have participated in it, but we're not talking about a trade. What I'm looking at is, since we have an interest in gold, we're really looking at how gold is affected by the changes in U.S. dollar. And what we like about that measurement, some of the ETFs, for example, the Direxion Daily Gold Miners Bull 3 times. That's Nugget, N-U-G-T, on the positive side, and on the negative side, DUST, D-U-S-T. It's a way, and it's 3 times, so it moves much more than the actual price of gold, and it is a way of measuring the impact of the strengthening or weakening U.S. dollar, not against other currencies, but just in general terms relative to how gold is being measured.
Well, I'd also like to look at oil prices recently because they touched $50 during the week, but it failed to hold at that level. Now, what does that tell you, Dodge? I mean, does that in a way signal that the $50 or the mid-50s is not a sustainable level to look at in the near term?
Well, oil is a commodity, and so from an investment point, it does trade as a commodity. And so for now, the expectations serve really no beneficial purpose as to the longer-term strength or weakness of oil. But since we're talking about a commodity, what we're seeing investors doing, they are taking profits and reducing their exposure when oil gets back into the 50s, and we suspect it will continue up into the 60s. And right now, the perception is to expect a correction action before new investments, even if oil does make another stab above 50. We suspect there's really not enough long-term momentum at this point to support an increase over 50 at this point. Oil glut remains. The inventory drawdown this summer due to structural oil well shutdowns and the rig loss, that's going to be very hard to turn around in the very short term. It takes much longer to retrace that. That should temper the seasonal price decline that we normally expect into year-end. But overall, we do expect there to be more of a look to the downside as opposed to the upside. So we'd be very surprised if we saw a return up above $55 for the next 2 to 3 months.
Well, you know, OPEC will be meeting on Thursday in Vienna. In fact, this is going to be the first with Saudi's new oil minister. So are you expecting any material developments from that meeting?
Well, yeah, yes, it's going to be quite interesting. Iran most likely will participate in the June 2nd meeting. It will likely accept a freeze on its production at 3.8 to 4 BPD. That's likely to occur before the meeting. Saudi Arabia would face basically a fait accompli before the meeting. Then you have Russia, a non-OPEC member and the second largest producer of crude oil. They will attend the meeting, and they're ready to freeze its production at the January level, as they agreed to prior to the Doha summit. Now, if Russia and Iran are on the same page, given the current fiscal difficulties of all OPEC and non-OPEC members, everyone else, including Saudi Arabia's allies, will in all likelihood back the production freeze. If that happens, then there are 2 scenarios that this is really what we'll be watching. If the Saudis acquiesce to a Russian-Iranian deal, it'll be the first time since the inception of the Islamic Republic that the Saudis have conceded the strategic leadership of OPEC. If the Saudis decide to scuttle the meeting, the move will bring the future of OPEC into sharper questions. So we're going to be watching this, the political moves as we go into the meeting, and then what the results are, because it will affect the strength of OPEC and how it will affect prices of oil worldwide.
Thanks so much for speaking with us today. That was Dodge Dorland, Chief Investment Officer of Landor Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.